Welcome to this edition of MDM Live, June 26, 2020. My name's Tom Gale. I'm the CEO of Modern Distribution Management. MDM is a market research and media company that provides market intelligence, trend analysis, and market analytics tools focused on wholesale distribution and industrial markets globally. We've got a great program today. Our team's going to do a quick overview of the Wesco-Anixter deal. That was announced, the completion of it earlier this week, and then we're going to bring on Jack Templin of Affiliated Distributors. And Jack, I'm going to bring you back here just shortly. So with that, I would like to, first of all, just make a quick acknowledgement and mention of our sponsors for today's program. It's sponsored by the people who are supporting our 4th annual Sales GPS conference, which will take place September 1st and 2nd. We'll be holding that in both virtual and live formats. If you're on our mailing list, you've seen some information about that. We'll be sending out quite a bit more here this next week. This is, as I mentioned, Mike Marks, my co-host today, has been my co-host in Sales GPS for the last 3 years. This year, we've really expanded it out in terms of what we are providing. We wanted to make sure that we're really trying to bring what the latest insight and information is around what's starting to work for people as they take a look at how do they transition their sales force. Again, there's a lot more information and models, but essentially it includes a lot around sales compensation, around taking a look at building more team-based selling and digitally supported sales teams as well. With that, let me first let's start out. Mike, we do this every week. How's your week been?
Busy. I mean, one of the one-liner that I got that's burned into my brain, I got talking to my son and he said, working from home is actually a lie because we're all living at work now. And it just, you get up in the morning, then you realize it's 8 o'clock and you're still working. So, but it's been a good week. Life's good. And I got a nice weekend. How about you?
Well, I celebrated a birthday this week and I played golf on my birthday and I got 8 pars and I know birdies, but I can't remember the rest of it. So that's a good day out in the golf course.
Was that a miniature golf course?
I think we don't have enough time for the rest of this conversation. We better get right into our program now.
Okay. I'll catch you later.
I'm really delighted to welcome back Eric Smith, who's rejoining MDM, and he's been on board here for about a month now and has already contributed a lot. He was on board MDM for more than I think about 3 years before, Eric, and it's great to have you back. And John Gunderson's on board here as well, our VP of Analytics and Sales. And Eric, let me hand it off to you in a second here, but I want to just sort of set the stage because this slide talks about channel drift, and if you take a look at Wesco's history, their acquisition of Bruckner Supply and development of integrated supply. This is a big deal in terms of their becoming sort of sole source for a lot of customers and really expanding out that base. But to kick off, Eric, if you just spend a couple of minutes and bring us up to speed in terms of the key points of the deal, please.
Hey, thanks a lot, Tom, and thanks for bringing me back to MDM, and thanks to all of you guys for having me on this week's episode of MDM Live. It's truly a pleasure to be here. Yeah, this acquisition is absolutely a market-shifting transaction. The Wesco's acquisition of Anixter, valued at $4.5 billion, but its impact on wholesale distribution could be even greater than that amount. Tom and John and Mike are all going to provide some more color on the deal and how it's going to impact not only the electrical channel, but other verticals as well. But before I toss it over to them, just wanted to provide an overview of the acquisition, a few bullet points to tee it up for those guys. And so in late December, Wesco announced its intention to acquire Anixter. Wesco twice raised its offer for Annixter, from an initial bid of $90 per share, then up to $93.50, and then settled at $97 per share, which breaks down to $63 per share in cash, plus a combination of some share formulas. Annixter actually terminated its prior agreement to be acquired by private equity firm CD&R for $3.8 billion. That had been in place since October. When CD&R didn't match that offer, the clock began for Wesco and Annixter to begin working toward closing. Annixter shareholders approved the deal, and it closed this past Monday on June 22nd. This deal unites the second and third largest electrical distributors according to the 2019 MDM Market Leaders list. Annixter ranked number 2 last year with $8.4 billion in annual revenue, and Wesco ranked right behind them at number 3 with $8.2 billion. Last year, Sonepar was the top player in the electrical space with $10.6 billion in annual revenue. Last year in 2019, Annixter reported $8.8 billion. And Tom, if you could go to that next slide, it's going to have some of these numbers. This is going to have a breakdown of Annixter's and Wesco's revenue. Last year, Annixter reported $8.8 billion in annual revenue. Wesco was $8.4 billion. This newly formed entity in Annixter is going to become a wholly owned subsidiary of Wesco. It's going to be a $17 billion juggernaut with $1.1 billion in pro forma adjusted EBITDA. The company, the new company, sells 1.5 million products, has $2 billion in inventory across 3 categories. John's going to go into a little bit more detail on this. But the 3 basic categories are electrical and electronic solutions, communications and security solutions, and utility and broadband solutions. And on this slide, you can see the amount of revenue per category. And there's a little bit of difference in how Annixter and Wesco report those. But again, we'll be breaking that down in coming weeks as well. The new look company sells into more than 300 cities in 50 plus countries, and now has over 18,000 employees worldwide. There are many dynamics to this deal, and we're not going to be able to cover them all on this call, obviously. They've got $200 million in synergies, and there's going to be an impact, as I said, not just on the electrical sector, but really other channels as well. We're going to be digging into all of these topics and more in the July 10th issue of MDM Premium. We're going to have an overview of really just the M&A landscape in distribution, and they're going to have a lot more detail on the Wesco Annixter deal and what that means for the industry. But I guess at this time, for a little bit more analysis on the deal, let's bring on John. And he's been following this deal from the beginning, and he's going to show you a little bit more about how this deal will transform the market. John, toss it over to you.
Thanks, Eric.
Thanks, Tom. If you can just stay here a second. I've been following this deal for a long time. In my past life, I was part of this deal when I was on the HD Power Solutions team, and we sold the business to Annixter. So full disclosure, I'm deeply involved in this on the acquisition about 3-4 years ago, and worked for Annixter as an integration leader on this. So this is near and dear to my heart. What's up here, you can really see the divisions that they have. They're uniting them under 3 nameplates. They're going with electrical and electronic solutions, the utility and broadband solutions, which will include the utility businesses, which are on the screen, and the communication and security solutions. So today, Annixter reports out in those 3 general buckets. Wesco has their electrical and electronic solutions and communication and security lumped into 5 categories below. So this gives you an overview of their total business. It also really gives you how North America focused they are today. So we're going to spend a lot of time talking about North America. As you can see, the majority of the business today, over 14 billion, is in that North America, Canada, US marketplace. Okay. So Tom, if you can go to the next slide. This is something we track at MDM. This is the top 25 that we track. This is a high level overview. There are a lot of dots behind dots here. There's just so many to track, not even including the local independents. So this is just a snapshot of the top 25. Annixter and Wesco today they participate in many of the same markets, and they publicly talked about they're trying to figure out their location mix and their plan going forward. So this is just kind of an interesting overview, and then we're going to have a couple of deep dives. What Tom was saying earlier that I think is really key is channel drift. If you've been in any channel selling into major industrials, national accounts, you have at some point probably competed with the Wesco national accounts team. And they're not just in electrical, and all the big distributors are starting to channel drift into, you know, all sorts of different channels that I never thought was possible when I started my career. So Wesco's got a safety group, you know, they've got lighting services group. Annixter has Triad, who's big in security. Each of the major distributors, I continue to see that channel drift starting and continuing. Mike, do you got some input there? And Tom, before we move on to the next slide? I think it's important to get your perspective.
Well, I think this drift, I mean, Wesco in particular, it has been a leader in that. And part of what drives that is distributors back in the day were all defined by their line card. Mm-hmm. You know, and everybody had their line card, and I'd sell whatever that was. And most of the channel power rested with the manufacturers. And what's happened now is that most channel power has migrated to the distributors. And one of the things that Wesco did a great job on their integrated supply is they in that part of their endeavor, they became early on very customer centric instead of and they became supplier agnostic. So when they go into a customer, they're selling services, and the product doesn't matter. The issue is, how do I save the customer money? How do I make it more efficient? And so that started the drift. When you go back, Tom, if you can back up to that first slide on safety. One of the very first things that hit the industrial space is everybody was looking, oversimplifying, at 25% gross margin was the magic number for a distributor. And everybody be looking at the safety distributors making 35. And they started to say, well, my customers buy that. Wouldn't it be great to make 35? We could discount it, get rid of all those safety guys, sell it at 30% and still make more money. And hence the race to the bottom started. But what happens is channel power always migrates down to the end user. And so this channel drift, you're seeing it everywhere. You're seeing small distributors do it, big distributors. And when people ask us about it, Wesco is always one of the companies that you talk about.
Yep.
Yeah, my only comment is, and this might sound like it's coming from somebody who gets excited about organizing paper clips in a neat row, but rather than call it channel drift, it's really channel expansion, because it's strategic, it's intentional. So I just, in terms of the way that I look at it, it's expansion. It's about expansion and adjacency opportunity. So that's I'm picking nits.
Well, you can pick nits. I mean, I won't ask you about which end of the paper clip goes down versus up, but
it's just like horseshoes. It always goes up.
Oh, thanks. I never knew that. Yeah. But I think if you think about being customer agnostic, salespeople go out and they try to increase their share of customer wallet. And if I'm narrowly defined that all I do is cutting tools, and I'm going to be excited, move into lubricants to go with it, big deal. I mean, if I care about what that customer is buying, it saves the customer money. It makes the distributor more money, the average transaction size bigger. So you know, there is some research that basically says in one more generation, distributors will be segmented by customers, not by industry, and our existing trade associations that are product centric will become more customer centric. So yeah. Who knows?
And you know, and this is not new. I mean, this has been going on for 20 plus years. I mean, it goes back to the days when I was associated with MRO software. Yep. And you know, the indirect costs for end market customers, the product is a small part of the overall indirect cost. It's all in the process and the management, the inventory management, and all those other aspects. So this, this just creates it's a new entity because nobody's put together something that looks exactly like this prior. And it's not fair to compare it with a Grainger. You can't. It's apples and oranges. So yeah, so when we'll be coming out in July with our annual top distributors list, where we break out across about 12, 14 different categories across industrial channels, who the top 150 or so of the largest distributors are in North America. And it's just, you can't compare because they have very different value propositions and business models. But it is important to understand the impact of this in terms of, this just isn't about the impact on the competitive landscape in electrical. This has repercussions across a lot of other channels.
Sure does.
Well, even if you just look at Datacom, I had, and I'm embarrassed, I can't remember the executive's name, but I did a panel for the National Association of Electrical Distributors on the future of the industry, and had a senior annexer guy, and this was like 2014 or 15, at ancient days in digital. And he shocked the audience because we're all talking about how people were dealing with, what are we gonna do about Amazon? They had put, this is long ago, they'd put a metric in place, which I forget what they call it, but it was I called it the Amazon index, but it was their internet vulnerability index. And they had a pie chart every month, what percentage of our revenues are actual products that can be a part number that are susceptible to an internet seller, and which parts of our product are we adding some value or some complexity that don't lend themselves well. And they actually had think how important this would have been back then. They actually had a strategic goal to increase the percentage where there was some service component going into it. So when I first heard about it, the very first thing I thought about was what Annexer's done in terms of them moving into the service business with Wesco. And you start to look at this combination. I think you're going to see some, from a customer's point of view, I think customers are going to be excited because they're going to see some new solutions, and those people that are still doing the same stuff they did yesterday are going to kind of see it as a threat. But it's let's just put it this way: with all the turmoil in the industry, it's a great decade to be a consultant.
So I just want to take another. Yeah, that's a great point. I want to just take another minute or so quickly and just to dive in here, John. You had mapped out both Chicago and Atlanta.
Yep.
Just talk through this real quick, and then we'll get to our next panelist.
Sure. So this is the market I live in, and this is just electrical distributors in Atlanta. So think about this. This is just the top 25 in Atlanta, not the local competitors that are in the market. So when you're Wesco and Annixter, you got to think about, if I'm combining staffs, or how do I get around town? What do I do with my trucks? What do I do with my distribution centers? These are all factors that go into each and every market discussion. So it's going to be really interesting to see how they make those synergy gains together, because you have to factor in your entire universe of who you're competing against. And when you just look at Chicago, right, that's just their locations. When you start, and that's not all of them, right? I haven't dropped the Triads on there and probably the Englewoods that they own. But when you start to look at this, you got to look at it almost down to a zip code level in terms of coverage and inventory and customer mix. So when you start overlaying demand and then customers on this map, there's very complex decisions. And it's the biggest combination of two really big players that have been very successful, each in their own right, 3 categories. And it is going to be utility, what I would call standard electrical distribution, which is construction and industrial, which are sub-channels, and then automation, and then communication and security. This is a move that is going to affect so many channels. And underneath that, if you're in industrial distribution, you're going to be affected by this, because it's going to, one domino is going to cause another domino to hit into the next one. And, it's the biggest move in the industry that I've been part of, and most of my career has been in electrical distribution. And I think they're two really strong players who are getting it together. And it's not just going to affect the electrical channel, but the total channel. And I just want to give you a snapshot of the kind of things we track at MDM. We're always trying to track demand also with our distributors. So this is all our software and work that we do, but we're trying to get down to the next level of analysis on these deals. Not so much what did they pay for the deal, but what does it mean from a sales discussion moving forward?
One of the things that I thought was really interesting, John, is and it caught my eye. I mean, this transaction was, what do you say, Eric, $4.5 billion or something? I mean, my brain doesn't go that high.
Yeah, 4.5.
4.5. So, but in the documents that they published, they predicted that they were going to have $200 million of synergies, which is, if you look at a PE deal, they always have huge synergies. This is like a Berkshire Hathaway. It's like almost negligible. It's like not even a couple percent. And the other thing that really surprised me, and this was like down in the fine print, they said it'd be 200 million in synergies over a 3-year period. So I've got to believe both of these companies have successfully integrated acquisitions, and I'll bet they got some really smart people in analytics, and they'll do all this well. But when they set this up in terms of being a public company and setting those expectations for shareholders, they don't have to rush to judgment. They can take their time and do it right.
Yep.
Yeah, that's great.
That was unusual.
Yeah, absolutely. Eric and John, thanks so much for joining us. Really appreciate. And I will do my magic here and bring on board let's see. And hopefully I'll bring up Jack here.
Woohoo.
Jack, welcome. Good to see you.
Good to see you, Tom. Hey, Mike,
So
how are you?
Hey, man.
Our panelist,
Happy Friday.
Our panelist today is Jack Templin. And Jack, just to kick things off, you for a long time, you were and I don't remember your exact title, but essentially you were responsible for the industrial supply division, but now you are president of the business units that include both the industrial supply division and the electrical business units of AD.
I think we have people out of the country listening to this. Jack, could you give us the Cliff Notes version? What in the world is AD? And that's not attention deficit disorder.
Right. Although people who know me may debate that, Mike. So AD is a powerful, really, community of independent members and supplier partners that work together across multiple industries. Some people might, the common phrase might be a buying group or a marketing group, but essentially we're made up of 800 member companies today, 9 industries, including bearings and power transmission and electrical, HVAC, industrial safety, PVF, plumbing, and even decorative brands, which is a subset of both plumbing and electrical. Those 800 member distributors are across 3 countries. And we have those broken down into 12 divisions based on, the specific industry needs and so forth. So it's interesting. These independent distributors, most of them have got long and storied traditions and histories. Our members make up over 5,000 member locations and have north of 66,000 employees. So a lot of people associated and a lot of businesses, multi-generational businesses, some as old as 6 generations.
And if I got it right, 2019 aggregate revenues across all the divisions and your members is north of $45 billion.
Yeah, that's correct, Tom.
Yeah, so it's and anybody who's followed AD, and many people have, obviously, when you think about the way that it's sort of built out each division, starting back in the early 80s with the electrical, and then bringing on the industrial with the evolution of Net Plus, prior to Net Plus, ID1, and some of the members coming in from there. And so it's just been a really interesting sort of progression in terms of how AD has evolved its value proposition to its members and to the industry. So I guess the first place I'd like to start, Jack, is just how are you doing? How are things going?
Oh, we're doing great. I'm a little, you know, obviously have historically spent a pretty good amount of time on the road doing the job. And so I have not been on an airplane since this all started. I think it was the third week in March. So personally, it's the longest period of time I've gone without being on an airplane in over 25 years. So that's kind of weird to think of it that way. I'm sure that's true for a lot of people who travel, but it's weird to just say it. We're doing good personally, family, as well as, you know, the team at AD is all doing really well.
Great. So you know, I guess to just kick things off, what are you hearing from your members? And you know, I think you've heard Mike and me talk before in terms of sort of, you know, since the end of March when we started this thing, you know, it sort of started off and you know, everybody was sort of in survivor mode and what do we do next to make sure to ensure we protect the business. But you know, things have really shifted, you know, week after week, and you know, Mike and I have talked about this as far as really people are much more now looking at the opportunities for growth and for really rebuilding and recreating the businesses that they have to make them stronger. What are you seeing and hearing from your members?
Well, I will tell you that it depends about, you know, it probably depends as much about geography and market served as it does anything right now. It's really interesting. I would tell you it probably comes as no surprise that for our members that are heavily involved in oil and gas, for example, it has been more disruptive than COVID. The pain that they're feeling in those markets, it's like, you know, is exponentially worse than say some of the markets that were shut down for a month or so. I'm not diminishing that. I'm just saying that that just goes to show you the differences based on the market served, the geography, all those kinds of things. So, you know, we're in 3 countries. It's and in all these multiple industries. And it was interesting to watch not only what was happening geographically in the U.S. You could watch what was happening in California, for example, and realize that that was on its way because they were on the front end of some of the things that were going on COVID related. And you could see it coming in other parts of the, you know, the country. And then Canada was its own unique dynamic with, you know, Quebec shutting down, for example, where other parts of the country did not respond as aggressively in terms of shutting down business. So the answer in terms of how and what we're seeing and what we're hearing is really geographic and demographic, and at the same time. I will tell you that, you know, universally, it's getting better. I mean, you know, we've gone from crisis management, I think, in a lot of people's minds. Oh my gosh, you know, people modeling what does it look like to be down, you know, numbers that they never thought they would ever even be modeling before because they just didn't know, to taking a breath and realizing that, you know, that we're going to make it and that the crisis is over. You know, you're hearing that kind of optimism. I wouldn't be doing my job if I didn't say a little bit about the fact that the spirit of the independent distributor in the midst of this is what I like the most, because they are nimble. We've got bearings and PT guys selling PPE. We've got electrical guys. I mean, they do whatever they got to do to survive. And that's, you know, they're not waiting for approval from headquarters. You know what I'm saying? They are just making it happen. And that's the beauty of independent distribution. And it's just, we're seeing a lot of dynamics associated with people trying to figure out how do they take advantage of the circumstances to win, quite frankly, not just survive, but to win. And it's really encouraging to hear that. People talking more about the future, the back half, 2021, and not about how are we going to, you know, manage, you know, social distancing or whatever. You know, they're doing it, but it's just kind of like move on. You know, we're going to wear our masks, we're going to social distance, but we're going to keep doing business. Last thing I would say is none of our members shut down, to my knowledge. They were all considered essential. And many of them were on the front line of providing, you know, materials to convert, you know, hotels and convention centers to hospitals. And I have a tremendous amount of admiration for, when some people were shut down and hunkered in place, many of our members were actually servicing the cause at personal risk, health risk, as they continued to make deliveries and pull orders and do the things that that make them as successful as they've been.
Yeah.
Jack, I think I have been amazed at the sheer number of total creative solutions that our independent field salespeople, counter guys, counterless receipts or contactless receipts in warehouse. There's all kinds of crazy things people have been doing that nobody ever thought about before.
Oh, and the scope of supply, you talk about channel conversions when you have, electrical distributors selling plexiglass to not for their own personal use, but because they had a customer that needed to shield a cash register, some dynamic, and they've never sold plexiglass in their life, and yet they're doing what they got to do to win.
Well, it's to me, there's sort of there's a secret strategy that independents have that goes back to Larry the Cable Guy. It's just get her done.
Yeah, absolutely.
Just get it done now.
Absolutely.
So let me just remind everyone to please use either the Q&A or the chat function, and please feel free to ask Jack or us questions. Let's shift gears a little bit, Jack. And what about suppliers? You've got a really powerful network of suppliers as well.
Well, as you can imagine, thousands of suppliers, and it's and what you hear from them is also very similarly aligned to what you hear from distributors. In some cases, it's what products are they in? Are there products needed on the front lines of COVID, for example? 3M's been in the news, and others and that are in the PPE space, are having to redirect supply in some cases to medical versus, say, industrial or whatever. So, and they're super busy, but at the same time, you've got supply chain challenges depending on where manufacturers are either manufacturing or sourcing product. Those that are manufacturing closer to home tend to have a better control of their supply chain, and so we're seeing less issues there. We've had suppliers that it was like a wave as the impact of the virus started to affect different geographies. You could see Mexico have challenges with manufacturing and getting products out of there, to the point where our members were deemed essential. We were writing letters of advocacy on behalf of our suppliers that they could use with the government to say, look, we need to be able to manufacture this product because it's critical, and we were doing that on behalf of our members. So on behalf of our members, but in support of our suppliers. So it's really been kind of all over the board. I would tell you that some suppliers that have a retail presence, the ones that are in the home centers and things like that, they saw spikes in demand when because I guess people were home and decided to do their DIY projects. I'm not exactly sure. But then the suppliers' experiences in general lagged that of distribution. I think distribution felt the pain much earlier. And in some cases, suppliers were like, what? We're not seeing it. We would talk to them, and then, but I would tell you, they see it now. I mean, right now is for sure, the suppliers are in a lot of questions about what is the remainder of the year look like? What does the recovery look like? And so it's a little bit of an indirect answer, but it really is all over the board in terms of what we're seeing from the suppliers. But explainable certainly by the circumstances that they all find themselves in geographically or supply chain or whatever.
Yeah.
One of the things that I'd love to pick your brain on, Jack, to the extent that you can talk about it without naming names, but all these things are bell curves. There's like really smart people in innovation, and then there's idiots that are clueless running around. And the same bell curve works with suppliers. But have you seen on the good side, have you seen any examples of innovative behavior in terms of how they're responding to this, or things that impressed you?
Yeah, I mean, we've seen suppliers do, and I will stay away from names only because I don't want to get them wrong if I remember wrong.
I'm with you. We'd all get in trouble.
But we've seen suppliers get into business, just like our members. We've seen suppliers get into business that they weren't in before either, in terms of manufacturing. Maybe they have a lot of technology that is similar, that could be applied to making whatever it is the shortage was, in the market, in support of the battle against the virus per se. We see a lot of things around that. there were some people that got ahead of the curve that saw what was happening, say in Asia, and ordered in advance of it, and they were rewarded. And we had others that did the opposite, kind of shut down inventory and found themselves today they're struggling to catch back up, not because it's a V recovery, because I don't know that it's going to be that, but when you take stuff down to zero and then the supply chain is challenged, it becomes really difficult to catch back up over time. And so we definitely, there is a bell curve of people that were,
yeah,
they look really, really smart now, but the people that were stripping, inventory out of the channel, early in anticipation of a global depression and all that, had that happened, maybe they would have looked as being pretty smart too. But some of those people are struggling to catch up right now.
So do you see some of that normalizing? I mean, do you have a kind of a sense of you talked about with some people, they totally just drew the inventory down in the channel. Do you see a normalization? Has there been a lot of substitution opportunity? I mean, I've got to believe it's been, there's been just a really rapid response in terms of opportunities for other suppliers to try to come in and fill some voids out there.
The channel's, definitely catching up pretty quickly in most of our divisions. The PPE space was the Wild West, as you can imagine. Suppliers coming out of the woodwork that no one had ever heard of because there was a shortage, and with all sorts of challenges. I mean, I got 5 emails a day from people that it was right next to the Nigerian prince that wanted to send them some money. They were selling N95s, so it was crazy what was going on, and that's where probably out of necessity there was more substitution going on because customer demand. They were get me what you can get. I think the other side, the other that wasn't involved in that PP space was probably a little more managed, manageable, and didn't see the dramatic, just get me something. So I don't know how much substitution took place, for example, in electrical or in bearings or places, but certainly in the industrial PPE space, it was get me what you could get it for a season.
Yeah.
I can see some questions. Go ahead, Tom.
I was going to say, by the way, I was getting those same emails, and I'm not on the leadership team of a $45 billion marketing buying group. So for context.
Yep.
Yeah. So a couple of different questions, Jack, and we're not going to talk about the details, but from our last segment, we talked quite a bit about channel expansion, and and I mentioned before in terms of AD's really expanded the number of its product divisions. Can you just talk a little bit about what that looks like and sort of what the future looks like for that and the vision for that for AD as well as geographically?
Yeah, so I'll speak to geography first. I would say that for the foreseeable future, I would say we're a North American focused business, and we'll always opportunistically looking for ways to expand on the value that we can provide to members, to independent distributors and suppliers. But the divisional growth of the multi-division strategy for AD is critically important on so many fronts. Number one, buying groups, people don't like to say this, but buying groups at their core are cost centers. They cost money. There's people that are involved in running buying groups, and that is an expense, and that expense is shared by the members of the group, and so the cross-divisional strategy that we have allows us to maintain the selective approach to distribution, while at the same time having 800 plus members that essentially are sharing in the expense side of the group. And so multi-divisions from a group perspective makes a lot of sense, in that regard. But maybe as important or more than that is the channel, I forgot what it was called in the previous, the channel shift. You called it channel, I forgot what you called it, Tom, but I've always called it channel convergence, which is this whole idea of people being asked to do more. If you look at the amount of MRO distributors today, and even electrical distributors today that are being asked to do safety, versus say, 20 years ago. It's dramatically different today. And it's evident in our strategy. We have a number of members that are cross-divisional in AD. They started off in, electrical and they became industrial, or they started off industrial and they became, bearings and PT or PVF or whatever the case may be. And so, the scope of supply that the end user customers are wanting to get from their preferred channel partners is what we're really solving for, right? If it's that wallet share, but the wallet share is not limited to an industry. It's limited to,
Customer.
The customer. And so we're seeing it every day, more and more members saying, hey, I like to be part of this division or that division. Is a big part of the value that we're creating for independents.
Can I throw a curve at you? It's slightly off agenda, but you touch a lot of people, Jack. And I have, I still do some public speaking. So we've had associations, the NAED, we just did a virtual annual meeting because they pulled a plug on it. And so a lot of this is going on. What are you hearing from your members about when they're going to be ready to go back to like an AD networking event, or what's the sense? Because there seems to be so much uncertainty right now. I mean, what are you hearing?
It varies. We have members that are ready to go back now. We announced that we were going virtual to, for our upcoming North American meetings. And we had members that were disappointed, quite frankly. And it was that we weren't going in person. We didn't vote or take a poll. We have to make a smart decision about that. I think in the end, everybody wants to, err on the side of the safety and the security of their people and themselves. And then you put on top of that, the challenges of manning their businesses in transition and in recovery and all those kinds of things. And to pull people away for a meeting in the midst of all that's going through, depending on who some people are ready to go, and some people. I will tell you, generally speaking, our announcement to go virtual was well received and strongly endorsed by our members for sure, and suppliers as well.
That tells you a lot right there. Yeah. So it's a ways to go, and I feel nervous for a number of the trade associations that are doing meetings here in the fourth quarter, and they had to sign like these $50,000 cancellation fees with hotels. So it's your basic crapshoot.
Yeah. Jack, there's a question that just came in here about AD is a world-class organization. Enjoy working with them. What has AD as an organization done to adapt, innovate during the pandemic? Are members asking for new or different services from AD as a result of the new normal?
Oh my gosh, I don't even have time to tell you. I mean, I'm not just saying that as that we are a substantive organization in people, and not everything that we do every day in normal circumstances was available to do. We weren't, visiting members, visiting suppliers, doing the things. So what did we do with our people? Well, we redeployed them, in ways that added value to our members as requested by our members. So I can go real quickly. We started a community site almost immediately with an app where it was allowing for the exchange of information. People didn't know what they didn't know about protocols in terms of managing their facilities and staffs and all that. But then all of a sudden we had, how do I navigate PPP, and how do I get and do I take it and do I not? And am I eligible? And there was a really, one of the biggest strengths of AD is the best practice sharing amongst the community that is the members. And so facilitating that when you can't have meetings in the literal sense was a big part of what we did. So we were publicizing a news you can use publication weekly that was the kind of the best of the web in a bunch of different subjects around navigating these times, thought leadership around remote work, things about keeping your people safe. And then as the time has gone on, it's been about things like going back to work. What are some of the best practices about setting up your facility and navigating the anxiety that maybe some people might have about coming back to work? And so a lot of it's been around communication. We started doing a survey it was painful for our members, admittedly. We were asking for survey information weekly, and we're publishing weekly results to our members in terms of what they were seeing by geography, by industry served, by vertical. so that people could start to compare themselves to what was going on. And that was, while painful, we had really high participation of the membership, and then and ultimately that data was used for them to navigate, the times that they were, that they were all in. We actually put together a couple, we have a few warehouses now. People don't forget that sometime because of our acquisition of IDC in Indianapolis. We have a warehouse there, and a warehouse in Sparks, Nevada, and a warehouse in Mississauga as part of the IDI merger. And we did a couple of power buy opportunities for members around hand sanitizers and masks that were not only for their own people, but in some cases outside of the traditional industrial MRO space, just to help them service their customers. So we've been busy doing a lot of different things that we never necessarily thought we've been doing. And the great part about it is when you have good people, they adjust and adapt quickly, and you get them focused in on a different task. And we had people who were normally doing certain tasks. We couldn't ask them to do that anymore, but they were running surveys, or they were chasing down hand sanitizer, or whatever the case may be. So we did a lot of different things. Yeah.
We had a great conversation last week on this program with John Salvador, who with and if you weren't here, global, I'm sorry, John, I'm blanking on Global Network Recruiting Agency.
Which is one of the top 20 in the U.S.
Yeah,
right?
Well,
I can't remember it either, so I'm just,
Yeah, well, thanks. The point I'm trying to make is that, John and also our other panelist, Corey from Valen Corporation, had some great insight in terms of how the future of work is really changing so quickly right now. So when you talked about this pivoting and the community that AD provides, everybody's trying to triangulate, and it's not just about the financial piece is important, but it's also about what are other people doing to really adjust and help their people first be safe. But I think where this is really pivoting right now is about how in the future are we going to be able to work together most effectively. I think that's this is going to be defined over the next 6 to 12 months, and our team at MDM is really starting to explore that and building out some research over these next couple of months here, specifically about what that's going to look like for the future of the industry.
Yeah. Well, Tom, I mean, and Mike, I guess one thing I would mention on this, because it was somewhat, it was difficult, but it was another one of the things that we did in the midst of all this was we worked with members and suppliers, not understanding what was going to exactly happen in the market, to try to secure, more time to pay for members, and those those things are not easy things to do as a buying group. I mean, those are asks of suppliers, and our supplier partners responded. I mean, in some cases, it can be a challenge for them because they're facing uncertainty of their own, and we're so pleased that that we're able to have relationships with suppliers that stepped up and helped our members, and in some cases, made a material difference. Obviously, it depends on the supplier and the mix and those kinds of things. But this was another thing that we don't spend day in and day out a tremendous amount of time on that. But but in the midst of what we were facing, that was another thing that I would put on the bullets of the things that we've been doing over the last 14 weeks, and to try and help our members.
Yeah.
Go ahead, Tom.
Well, just a footnote, and Eric, thanks for the backup, because he just fed me the name. It's GRN Coastal, John, the recruiting company, and that's John's business. So I just wanted to make sure I clean that up.
Thanks. That was very well done. Thank you, Eric, wherever you are. And,
Mike, go ahead.
What have you heard from your members, or actually nobody knows, but what are the kinds of conversations that you're hearing from your members about how the field sales role is going to change going forward? Is any of that on anybody's mind right now?
It's on everybody's mind, but what's interesting is that I'm hearing a lot of really positive feedback about not only the effectiveness, the willingness, I should say, of customers to use Zoom and Skype and everything else in terms of doing visits and engagements, but also the effectiveness. And so I think what you're
wait, hold it. Effectiveness?
Yeah, like in other words, I can make, if everybody's locked down, how many cars, I'm not driving between places. Now, do I think it's just,
Oh,
the effectiveness of being able to meet with, 5, 6, 7 customers a day. The customers are willing to do it if you're adding value. You're not just, so I think, I think that some of these things that we've been forced to do are going to survive, be well beyond, a vaccine or however this ends, because of just efficiencies and the willingness of people to adapt. Maybe they were slow to adopt technology before, and now they don't, they don't fear it as much. And so we're hearing some pretty innovative things from a productivity standpoint, including training, customer training. Some of our distributors that do automation related training and things like that in the electrical space literally rescheduled their trainings to be virtual and had attendance that was pretty good. I've heard stories of sending samples in advance of the Zoom call, and they're on the Zoom call and they're demoing the product while the product's sitting on the desk of the customer in front of them. I mean, it's just amazing.
wow. That's amazing, Jack.
Yeah.
Because I mean, I'm on the board of a university, and since everybody's doing anything virtual, the thing that everybody's freaked out about is how do you do a lab? But essentially, if they're sending the samples out in advance and the customers, I mean, you're doing a virtual lab. I mean, that's brilliant. Very cool, man.
Yeah.
Once again, shameless plug. That's more like, those kind of ideas are much more likely to come from independents than they are anybody else.
One of the big differences, as long as I'm allowed to be somewhat politically incorrect, is that independents tend to ask for forgiveness, and the big guys have to ask for permission.
I couldn't agree more.
Yeah. Jack, I guess, is there anything either just in terms of what you've heard from your members, both on the supplier and distributor side, in terms of I guess surprises in terms of what you've seen, and sort of what's shaken out up to now?
I think we've all known, and this goes back to Mike's last comment, is that I think we all have known over the years and intuitively that independents are more are typically more flexible and nimble and all those kinds of things. But really, I will tell you that it was really on display in the last 14 weeks across all of the verticals the industries that we serve. The bureaucracy, and there was a lot of opportunism in the middle of entrepreneurialism, and it was really exciting to see, and it was a reminder, by the way, of why independents have been around for as long as they have and aren't going anywhere. Really, because as long as there's someone that's willing to solve a problem, not make excuses, you just find a way to get it done, creatively, and not get wound up around the bureaucracy. And when you're in a moment of crisis, it's really, you start to see, who the doers are, who's asking for permission versus who's just doing. And I wasn't surprised, but I was reminded by the resilience and the creativity of our members and even our own staff. It's been, I don't wish this on anybody. None of us want to go through this, again, so to speak, but you have to look for the silver lining, and the silver lining in all this is the, resilience and the flexibility and adaptability that I've seen. It's really been unprecedented in my career.
Yeah.
I've seen the same thing, and it's hard to talk about the upside, but it's leaving the idiots aside. And there's no shortage, but I mean, it brings out the best in people.
Yeah. And I'm just going to do this for 60 seconds or less, but Jack, what you said about the value of the independents, I'm just going to broaden that out to, as we rebound in North America, one of the things that's going to accelerate that is the nature of the diversity of how the distribution channels can serve all these fragmented markets. And that includes the role of the nationals as well as the role of the independents. And they all play important roles because certain customers want to deal with certain types of distributors. And there's no other ecosystem in the world that has the same level of flexibility, adaptability, and as much of what you talked about in terms of the value that AD provides through its members as well. So and I want to just kind of shift to a final sort of, I'm not going to ask you to predict the future. That's not fair.
Now he's going to ask you, Jack, be careful.
You know, you are in touch with, you know, arguably on a day-to-day basis, you know, an incredible number and cross-section of both distributors and manufacturers. You have a manufacturing background, having been with Stanley Black & Decker as well. What do you see, I guess, from what you're hearing from members in terms of, you know, not how fast or, you know, when's this going to happen? Nobody knows, but just you touched on it a little bit, but sort of the shifts that you see in the nature of work, you know, between the way it used to be and, you know, the total digital, you know, e-commerce platform, Amazon platform. What do you see in terms of shaking out? What's your perspective on that?
Wow. You know, I think that we saw it ourselves in our own e-commerce program in terms of the more, you know, our department has been as busy as ever helping members whose demand and registrations and things were not up 20, 30, 40, 50%, but 2, 3, 4, 5, 6 times as people started to adapt. You know, in some cases, it was to place an order online to come and pick it up curbside, or to so I don't really know how much and to what degree you know, that will sustain, but I will tell you that whatever it was going to be is going to get there that much faster now, because you know, some of the things that may have caused people to move slower or, you know, be a little averse to whatever they were, you know, the move to different approaches. I think that this experience has kind of forced them to, you know, to adopt certain practices quicker. And so I don't think they're going backwards, all the way backwards. But I do think there'll probably be a little retrenching to the business as usual to the extent that that's possible. I don't know if that answered your question around the technology thing, around the economic part of it, the recovery side of it. You know, we don't have a crystal ball. We you know, we don't really know, but I as you might expect. But the one thing that I will tell you, and this is not to be, you know, overly optimistic, but if you go back to, you know, some of the recessionary times, the difference is that business went down and there was no there was no light at the end. There was nothing at the end of the tunnel that said, I can see a bright future. It was like, God, we hope the recession ends soon. And then it just grinded away until we came out of it. What's interesting is there remains, at least from our perspective, pent up demand. The backlogs remain, projects remain. There is an inertia of the economy that is still there, that wants to move forward, that was shut down by this pandemic. And if we can get the foot off the throat, you know, the economy, sorry for that, if we can stop choking the economy, you know, then maybe we can get, you know, some momentum back. So I am optimistic that I hear that a lot from our members, that it's not like they're backlog zero and they don't have anything to work on. They just are waiting for the plants to open and for the business to open so that they can pursue what they were pursuing, you know, before. So that gives me optimism.
Yeah. Yeah. And a great answer. Thank you so much, Jack. And with that, we're at the end of our time, and thank you much.
Oh my gosh, you did it again. We ran out of time.
Absolutely. So Jack, great to spend time with you, and hope to see you soon. Thank you.
Have a great weekend, man.
Thanks for having me, Mike.
Take care, buddy.
So Mike, just a quick program note. We're starting here through July. We're going to every other week. So next week we're taking off, but then we'll be back with 2 programs in July. So I look forward to joining you again. I'm looking forward to a nice 4th of July break, and I hope the same for you.
Yes, we live in a marina in Florida, and the city's fireworks display is across the street in the municipal park. So I got a marina in the back and a municipal park, and there's no firework display this year.
Well, we're heading up to Steamboat Springs for a bit in the mountains, and they've canceled not only the fireworks, but the rodeo up there, which is an awesome rodeo. So
I've decided, instead of fireworks, I'm going to sit on my balcony and drink some really fine tequila and have a cigar.
Well, I wish you the best and a great week, and I'll see you soon. Thank you,
everybody.
everybody.
Thanks for listening, everybody. Bye-bye.
Bye-bye.